if we get, now we just put this channel in, so it hasn't really aligned with the universe. Like my simulation, whoever's running my simulation is just like, oh, okay, pianomattyb, he put a channel of ascension. Let's bounce off this arbitrary doodle he just put. Okay. It's hard to beat the amount of low volume that the summer had. It's a nice time for those psychopathic old nerd whales to dump. It's like, no volume, you say, eh? Destroy market. Market successfully destroyed. You almost knew it was coming, didn't you? You know, we have so much PTSD when it comes to Sundays now that we just all automatically expect a Sunday dump. And sure enough, we got it and we broke out. Yes, e-money, the history erase button. I remember watching that Ren and Stimpy show back in the day. Like, I think I was in my 20s or something. And I thought it was so interesting how they decided to, part of their shtick would be to like real close-up things of nasty facial stuff, like weird hairs. You know, it was an interesting take on cartoons. I don't really remember it all that much, but I know it was funny. You were either like, there was some Ren and Stimpy maxis, right? They're like, this is it. It's better than Simpsons. Case closed. I didn't watch enough of it, but I knew that it had some kind of gross depictions of nose hair and stuff. One House Productions. 5 pianomattyb members shy on Cyber Monday. Guess what? The Bitcoin price also is on sale today. That's a low C. Thank you for the 5 gifted pianomattyb memberships, One House Productions. Thanks for tuning in on a Monday morning. Cyber Monday, price is down. No one really is happy about anything, but we're here to explain what the hell's going on. And here's a disclaimer. Nobody knows, right? We're just kind of looking at the charts. What did they do? Well, we broke out of our channel of ascension, which channels of ascensions, 75% of the time, they do break down. And we got it, and we're back underneath where we've kind of been for the past 12 months, underneath the 50 and the 20 moving average. This home sweet home, some might say. Other than that, you know, we almost expected low volume that you're going to see it. I saw some sort of Michael Saylor, maybe we should go green. I'm like, it should be maybe we should put red dots. That's what he should have done. Because as soon as I saw that cryptic text, I'm like, we gonna dump. And we gonna dump indeed. And then we went down. Here it is. I mean, this looks like a nice little rounded bottom, right? But the market hasn't opened yet, right? But if you were just to look at this, it would look like a nice little bottom. Throw a wick down, get denied by the sellers, the bulls pick it up, and maybe, just maybe, we make our way back down to, I would say, like 89.1 would be a nice recovery by 9 a.m. Because we know that at about 8:45, you know, release the hounds. We get a little action, right? So maybe we can pump up to 89.2 by 9 a.m. Is that so much to ask? Is that really so much to ask? We do have the headwinds of the 20 moving average just careening to crossover. I'm a coming 50 and I'm going to cross you like you never been crossed before. I don't know. I'm not sure what accent that is. Maybe it's a southern accent. I'm not sure. Yeah, so we can get to 89.2 by 9 a.m., 9:30 latest. That would be, you know, it would start smelling like recovery. Like, is that fried eggs and bacon or is that a recovery? I think it's a recovery. But then we got to contend with the 20 moving average headwinds. And, you know, to be back, we got to abide by this doodle, which was rocking and rolling all weekend long on the 24-hour stream. I hope you are implementing the 24. It's on my TVs all the time. It's nice because I don't have to check my phone all the time. You know, it's just in there. It's up on the TV and I can see it. Oh, there's the price. You know, I don't have to sit there and I become less of a chartist, being more aware of the price, if that makes sense. You know, when you take these breaks and you live your normal life and you're always kind of going back to your phone. it's freed me up. And it's a nice way to, when people are on there, you can kind of touch base with people, leave messages for your friends here in the boutique community. Now, kissing the bull market goodbye. This is why I said that, because like I've been almost a little bit bearish since 100K. I've made some top indicator videos. I think I made 4, and that was around 106, I think. So we pumped up 20% more. So they were off the market, right? And now why I think kissing the bull market goodbye for me feels good, because I don't like to hold on to hopium and dreams and almost fundamental hyperbole, if it were. There's never been more bullish fundamentals or like I say, dad rules in the history of Bitcoin. There's everything going for Bitcoin, but Bitcoin's. It's in its own little market, and we have 30 days. Has December, or is it 31? I think it's 31. We have 31 days to get above 126. If not, whether we want to admit it or not, the bull market is intact. We peaked in the fourth quarter. It wasn't the peak we wanted. It's like every time I would go to get a haircut, I'd say, just give me the same thing. I'm here. It's my cycle. I want my haircut to look exactly the same as it did last time, and it was slightly different. I'm like, God damn it, you've been doing my hair for 20 years. Can't you just like do it the same? And the reality is they don't even remember how they did my hair. It's just my own confirmation bias, right? So that's what we're here. We want the same haircut as we did, but parabolic blow off top. Just like I wanted the haircut. Can I get the parabolic blow off top, please? Like I've been getting for the past 20 years in this cycle. And they go, sure. And it's slightly different, but it's still legitimately a fourth quarter post halving year high. And now the only thing that can deviate from that will be if we hit an all-time high in 2026. And then it would be quite a relief, I would think, for me to get out of the cycle, because this is the conundrum I have with the bull market cycle, is that's not how markets work. Like I like to keep it simple, stupid. And that's what I've been telling people for a long time. It's like, it's just the simplest cycle. It goes into a bear market, you get to accumulate, then it runs up, and then we do it again. And then it has an all-time high, and then it crashes, and we do it all again. The market does not work like that. If it was that predictable, everyone would just be gazillionaires, and to a certain degree, if we want to call a bull, it's function like that. So I would say that's why I don't sell my Bitcoin, because I think things will change, and I don't want to be caught offside. You don't want to be in this environment as a hodler, as an investor, doing everything right and just deviating once, because that's how the market works. You just deviate. That's why these traders get wrecked, because they just deviate once, and then it's October 10th. It's like, what are the odds of me putting in this long on October 10th and getting wrecked? Well, high, because usually people do get wrecked. But the reason why I say kissing goodbye the bull run is that, let's call a spade here. We are in it's our third candle close under the 50 moving average. We've never recovered since that, right? If we go back in history to 2021, 17, we've never closed 3 times under the 50 moving average on the weekly chart. This is the weekly chart, and recovered. Now, I still do believe we will get one last push to 98, the bull market rejection zone right here with the papers. I do think we will get that. So far, the program's playing out. We made a run, we hit our bottom, and within that same week, we ran up. It was, if we just say from the bottom to this top of the wick, that was a 20% recovery in a week. That's what we do in these relief rallies. That's 20%. We didn't close it. We ended up coming down and closing it very weak. So, we ended up getting rejected. So it was 8% by the end of the week candle close. But it was a 20% recovery in that week, and we couldn't get above the 38.2% bull market rejection zone. So it's a textbook classic move when it comes to the all-time high, the 30% crash, and the relief rally. Like we've checked each box, right? Now, is it close enough? It's 96. Let's call it 96. So we're $2,000 away. And back in 2021, that would have been the counter is stuck. Let's see here. Oh, let's refresh this mother effer. How does that go? There we go. Okay. Hope all's well here. Okay, where is my comments now again? Ah, damn it. See, you just touch one thing. Oh, I know. There it is. Okay, gotcha. The counter is stuck, Kenny says. Gotcha. So this is the textbook that I've been talking about forever. High, all-time high, 30% crash, run up to 38.2%, get rejected, right? That's what we've done. And then we've also closed the candle 3 times underneath the 50. It's not good news for the bull market. And if we want to get extra bearish, because listen, let's put our hands put our head in our hands and start commiserating on some potentials. Now this is a couple things. We'll put in the doodles like we did put in the doodles. What does this look like here? If we build out another here, well, it looks like a bear flag, right? Now it's also a mother of all bear flags, really, and we're dealing with mothers of all bear flags these days. So let's put it in there. It's a mother of all bear flag. Now, like I said, a bear flag is usually at the end of a head and shoulders pattern. And now, if we were to, spend December up and down in this bear flag channel, like hitting 92, coming back to 85, it's very likely that we could do that. Who the hell's texting me? That would paint out also the mother of all head and shoulder pattern, right? So we'll just do this, zoink, head, zoink, shoulders, and then up by it, maybe getting closer to the bull market rejection zone of 98.1. Bull market rejection zone of 98.1 for my future videos. Bing. And then we would play out this mother of all bear flags, which would also be the mother of all head and shoulders patterns. So let's just, you take the pole, you slide it all the breakout point, and then we're all at the 200 moving average. You see how this this all makes sense, right? We're just bingo, bango, bongoing down to all these historic metrics. 200 moving average, 56K. Pianomattyb, it's Monday morning. It's not, we don't need to get 56K-ish on our asses here, right? But you can see how this plays out, right? And then it makes more sense when you kind of zoom out a bit. And then it just looks like look at all this action down here. This was, when we first, this would be Max Payne too, kind of. Not really. You could see how we would start kind of consolidating here at the 56K level. I still think we'll hit 40K just because of it. I had a dream. I had a dream about 40K. Don't want it to hit 40K. Actually, I wouldn't mind it. I wouldn't mind hitting 40K. If you put a package together, let's say you save up 10 grand between now and, November 2026, $10,000. It's not the easiest thing to do. But if you can do it and it hits 40K, you just picked up a quarter of a Bitcoin. That's pretty insane considering that, I thought Bitcoin was running away, in the normie, us, we wouldn't be able to pick up substantial sats. It would all become relative. We would start thinking in sats. I thought we would start thinking in sats, and I do believe we'll start thinking in sats by 2028 because it'll just the concept of having a Bitcoin or buying a Bitcoin might escape most normies. So we will just, like inflation chopping off zeros, we'll just start thinking in sats. I just realized that was a Donald Trumpism. He does this a lot, eh? I never really mastered the Donald Trump accent. E-Money, Sailor's best move could be buying on the market to keep the overall value of his company above water. Yeah, I always thought that would be one of those keep it simple type of moves. Like, listen, we gotta before we sell Bitcoin, for whatever reasons, I don't think they have to. We should splash the market once, once. Seeing as though all these whales are splashing it on the downside, let's splash it onto the upside just once, just to keep us underwater. But there is the levers of the economy end up getting pulled into play. So if everyone's down and bearish and Sailor comes and splashes the exchange with like a $5 billion buy or something like that, and we spike a $20,000 candle without the momentum of the bulls coming back into the market, we would just, probably come down again. It would be like it would be like one of these candles here, one of these 20% candles that just go up and go down. Now, but it would be nice, and I think maybe that is the only thing he can do is start splashing the exchanges instead of all these OTC. But maybe it's just not like we're talking about a game that we don't fully understand. Like, it's out of my tax bracket and my intellectual ability to understand the future, I suppose, why people would always... I've said it for a long time here on this channel that the Black Swan was no retail, and the joke's on them. So all these institutions, secretly buying over the counter, the joke's on you because there's no one to pump your bags. You just decimated the market, right? And then like with this behavior of Sunday, in everyone's heart of hearts, we were like, yeah, here's the dump, right? It's almost predictable, right? At this point, we're going to get dumped on. So let's put that in 56K just for future videos. It's the 200 moving average. Like, it's not absurd that this would play out. Now, it would probably take longer. Like, let's go out here to bottom of the bear market, November 9th. Yeah, this will be nice to revisit. A 56K-ish, November 9th, 2026. I would say the bear. You can see how it might, this 20 moving average. I'm not going to keep this doodle in. It's too messy, but it would. Hey, I thought I'd doing the marker here. You can see how it would kind of curl over at that point, right? Get rid of that. But that's why, and you go on the monthly channel, monthly chart, and we're dealing with 3 red candles. We haven't, like, if we close under 90K in December, we will print out 3 red candles. Now, we haven't had 3 red candles on the monthly almost forever. Like, the last time was when we, heading down into the deep, dark bear market. This was April 2022, where we had 3. And then we had 3 here. 3, 3, 3. So you can see at the end of the bull market run, no matter what you want to call this little halftime show with Janet Jackson and Justin Timberlake pulling off and doing the nip gate, this was 3 red candles, indicative of incredible bearish action. And then, of course, we went into the nether regions of the bear market. So we haven't seen that since then. The last time we said it was July 2022. And now if we don't get above 90K in December, if we close under 90K in December, we will print 3 again. And that is, those are like on these big monthly charts, those are massive indicators, right? It's time tested Barishnikovs, if it were. Now we saw here in February 25th after this. So this is like the same month almost. So this is November, arguably the greatest Pumpvember, right? So we may have to like truncate these cycles in order to fit our narrative. But at this point, I'm not sure what that does. Does it make us feel better or feel worse? I'm not sure. So that this candle that reversed this 3 printing ended up being a 25% candle. So now if we were to see that, 25% from here would be 105.8. Now closing that would be a game changer because we would be over the 98.1 bull market rejection zone on all metrics, 4-hour, daily, weekly, monthly, right? And it may be game on again, so to speak. But that would take up maybe into 2026, and at that case, and like it's a real simple metric that we all have to wait for. Like erase every other thing you see, every other expert who's calling things / salesman. Forget that. 2026, another all-time high. The cycle's broken. That's it. There's just one little thing. That's it. Now, if it happens in December, cycle isn't broken. If it happens in, January, February, but here's the thing. January, February, Q1 is just arguably Q1, Q2, Q3 really. They're not that exciting because once you're into the end of Q2, like April, May, you're in the summer bummer, right? And that will last, that will take us into the bottom of the bear market. Cyclically speaking, if everything is as it is. And Q1 is generally unexciting and bearish too. There's a lot of tax harvesting, especially February. It's not the greatest month. So it would be really bizarre and, like the market likes to do, wreck a ton of narratives if we were actually bullish in Q1 or 2. That would change a lot. Right. You can see how, the market would do that, would wreck everyone because generally Q1 is boring. Q2 is also pretty shitty, but Q2 will have Jerome Powell exiting the building and a Trumpinian yes man coming in. Now, I'm not sure if the Fed chair is like a dictator. Monetarily speaking, there are, 9 or 10 other, mob bosses to all the central banks. So they all have a say, and I'm not sure if it's consensus and he can just where am I here? Just veto it, yay or nay. Maybe he has to go with consensus. So I'm not sure. Or maybe the consensus days are over. But that will be a bullish. I could see Q2 baking in a little bit of a pump into April 1st, and then just like everything, everyone will expect, we're off to the races, free money, right? And then we see another crash. Just it's a lot more predictable to take the contrarian approach, that which everyone thinks will probably not happen, right? If you're on that side of the boat where everyone's like, it's going to pump, you're almost guaranteed that's not going to pump, If you go back to videos in the summer, my big worry was that everyone was too sophisticated in this market. Like, we've all been here long enough to know Q4, post-halving year, this is the money, right? That's just not the way the market works. If it was that easy, like everyone would just be dumping millions and millions of dollars into it. Instead, people were selling millions and millions of dollars into it. Now, if there is a silver lining with the immense amount of dumping that was going on, is that they did have buyers. Well, unfortunately, this is also not the greatest news. The people that were picking it up were the massive, faceless, institutional buyers. Those aren't. We all knew Bitcoin would graduate. We all knew it would graduate. We wanted it to be, a precocious teen forever, but it has graduated and it's bigger, it's more stable money, and it's out of the hands of the historic Bitcoin hodler, not my hands, although I don't have any. So there's that. But generally, and that's an unfortunate aspect of it, because once we let the big boys in, big boys play big boys games. And There's no way around it, right? The only way this changes is maybe if Michael Saylor, that would be the Giga Chad move, is to splash the exchange and just wreck them, right? But see, just like we saw in the silver market, I think on Thursday or Friday or Wednesday, where they said we are experiencing there's a cooling issue. It's funny because like in every lie, there's a truth, right? Yeah. We had to cool off the silver market, right? They said it was a cooling issue with our servers. And to most people, it's like, they just want the answer. Oh, okay. Yeah. That's what happened. Yeah. They stopped the exchange because there was a cooling issue. Oh, that makes sense. But really the truth is, they had to cool the market off. There was a cooling issue. Silver was too goddamn hot. We'll like to see what happens, in this morning. But just like, I was part of the silver gold team for a long time, but I just don't like to be in that market when there's so much manipulation. It's hard. It's like being a silver and gold bug back when I was, circa 2017, maybe to 21. Like once I was out. I never looked back. But it was much like the 2025 bull run. Constant fundamentals were amazing, but constant dumping, right? Like Michael Saylor buys, price goes down. This institution buys, price goes down, right? So that's what being a gold and silver bug. But we know that has been manipulated for decades. They just pay a little slap on the wrist, and then they business as usual, and they start splashing it on the open with naked shorts. And that's once we're into this aspect of a mature Bitcoin with all these derivatives, there's a million ways to crank those economic levers in their favor, right? Especially if no one's buying on the exchange. But it's a humble opinion of this piano that the exchange days are over. We tried our best to work these exchanges, and most of us in this room know that the only way to get exposure to Bitcoin was with the exchange. Now, there's all these institutions that are, they want you to buy from them. Like I said before, they're not here to take some of the market. They're here to take all of the market. So, the best thing you can do is, just put your skates on, get on the ice, and, try to move the franchise forward, and we are a team here. That's probably the fundamentals of being a Bitcoin hodler, is that we're all on the same team. Now, we are going to come up against some better players, some better franchises, but it's never stopped us before, so, looking forward, the organization just has to, put on their skates and get on the ice and, work as hard as we can. Really, that's what happens. I was supposed to hit the button. That was the big close. You see that? God damn it. Nothing's going right on a Monday morning. I hate Mondays.
Make sure you like and subscribe and share this video.